Well, thank you very much indeed for that welcome, Amoy. I do have a presentation, so I'm going to share my screen and we'll be running through. The presentation will take probably half an hour or so. I hope you look forward to it. Very happy to take questions at the end of the session and get involved in the debate. So as Amoy said, I'm director of the ZN Group. We are a commercial think tank, is usually the way we describe ourselves. We think interesting things, and some people pay us for it, which is rather nice. And the agenda for the talk today, I'll talk a bit about ZN and long finance, which is one of our programs. Think about the challenges facing international centres, current themes in financial centre development. I'm going to take a closer look at Singapore and Luxembourg as two centres who are small in terms of their geographical size, but punch high above their weight in terms of financial centre development. And then draw some lessons which I think are probably relevant for all financial centres, but particularly maybe for those in the Caribbean. So ZN and long finance, first of all. As I mentioned, we're a commercial think tank. We've been going something 27 years, 26 years. And the idea of ZN is to promote societal advance through better finance and technology. There really are our key areas of expertise. Although we like to expand technology into science and distributed ledgers, and we like to think about finance in all of its aspects, including economics. And we work through being a small central team, but bringing in experts to help us. One of our programs is called Long Finance, and it is designed to address this question: when would we know our financial system is working? And so it's a very open question, and that's how think tanks, I think, can do their best work, is when we start off with an open question. And we think about finance as being a very long-term prospect. Short-termism has too often defined the economic view, and we are trying to think about how finance needs to deliver over the next 100 years. We're probably best known for doing research into financial centres. The Global Financial Centres Index has been running continuously since 2007, building on some work we did before that. And we published our 31st edition in March. So that's still going very strong. When we started, we were tracking 46 financial centres. In the latest edition, we're up to 119 centres that feature in the index. The Global Green Finance Index has been running since 2018, really in response to the need to develop finance which is focused on instruments that change the world in terms of reducing greenhouse gases and having a sustainability impact. And again, we've most recently published the 9th edition of the GGFI in April. Finally, and most recently, the Smart Centres Index, which looks beyond financial centres to other commercial centres, and is tracking the way in which places in the world are good places for innovation and technology and science. So that includes things like fintech, but it's not limited to the financial sector. So the Global Financial Centres Index, I won't give you many tables and figures today. But here you go. New York takes the top ranking position, followed by London. Those two positions were reversed only a couple of years ago. So New York has overtaken London and seems to have secured its place very firmly on the top of the list. You'll see that the top of the list is dominated by US and Asia Pacific centres, actually, with some Western European centres there as well. And this is our latest snapshot, as it were, of how financial centres are developing and how good they are in terms of being places to do financial business. And the GFCI is built around 5 areas of competitiveness: sort of business environment, human capital, infrastructure, financial sector development, and reputation. And in each of these areas, we take a whole range of quantitative measures published by a whole range of people, but including the World Bank and OECD, but lots of other people who provide data. We now have almost 150 quantitative measures that go into the GFCI index. And as well as the overall index, which I showed you the top 20 for just a moment ago, we also develop indices which focus on those 5 areas of competitiveness. And you'll see that different centers have different strengths. While New York is top across all of those 5 areas, other centers have the particular strengths. For example, Shanghai scores very highly in financial sector development. Edinburgh scores very highly in human capital, although it doesn't score obviously as highly as that in the overall index. And so in this way, we can show different financial centers how they are doing across different areas of competitiveness. And I've picked out Singapore and Luxembourg on this chart just because I'm going to use them in case studies later on. You'll see that Singapore does well across the board, but is a bit lower in terms of financial sector development, which some people might find surprising, but actually that's what the data shows. Luxembourg does particularly well in human capital compared with its position in the overall index. I'm going to move on to the challenges faced by international financial centers, because the evolution of centers is where we're focusing today. So first of all, just a word about sort of what financial centers are, the different types of centers we see across the world. And some financial centers fulfill more than one of these roles. First of all, global financial centers. The kind of sense of this is places like London and New York, where wherever you're from in the world, if you walk into a financial services business, you'll find someone who knows about your needs and your requirements, and it'll be almost like walking into your local financial services center. International financial centers that conduct a significant volume of cross-border transactions. Niche financial centers that are worldwide leaders in one sector. I'll come on to Luxembourg and green finance. It may not be leading, but equally in green finance, Amsterdam is a pretty niche center with a particular strength in green lending. National financial centers that act as the main center for financial services and expertise within one country. New York fills that role as well as being a global financial center, but there are plenty of other national centers across the world. And regional financial centers that conduct a large proportion of regional business within one country, and would not normally score as an international financial center unless they also have a niche international element. I mentioned we've got 119 centers in the GFCI. This just gives the shape of the world, as it were, and heavy concentration these days in Asia Pacific and Western Europe. And if I'd shown this slide even 10 years ago, the number of centers we were tracking in Asia Pacific was far fewer. So in particular, the rise of China, but for example, looking at Korea, we've now got 2 really strong centers in Seoul and Busan, and across the world, you'll see new centers developing or coming to the fore. My prediction is that Africa is going to be the next place where new financial centers emerge. In the last couple of editions of the index, we've seen Kigali and Lagos join the Global Financial Centers Index. And there was a reason why I think Africa's next, and I'll come on to that in a little while. And this is actually the introduction to that story. This is a really interesting statistic. What this shows is trade as a percentage of GDP over the period 1970 to 2018. And you'll see there's been a huge increase in the volume of trade as a proportion of what has been a growing GDP across the world. We think this is one of the main drivers of international financial center development. The fact that international trade has been growing very quickly over this period has given it's part of the reason why we have more international financial centers and they are able to do business, because international trade needs international finance. Obviously, with the pandemic, that percentage has fallen back a bit. If we were to extend that chart into 2019 to 2021, but it's a significant driver. And the reason I believe that Africa is a place to bear in mind in terms of the growth of new financial centers is that trade in Africa is projected to increase sharply in the next decade, particularly following the agreement of the cross-Africa trade agreements, which are starting to dissolve customs and border difficulties across the continent. I've been doing some thinking with a range of financial centers about where they are and what the challenges are. And there's three big challenges that face not only financial centers, but all of us. Demography, sustainability, and the Sustainable Development Goals, and digitization and the fourth industrial revolution. And these are the things which financial centers have in mind when they're thinking about where to focus their resources, their actions, where to put their effort. And the four areas which financial centers generally say are the areas where they are focused at the moment is first of all on sustainability, secondly on the digital revolution, third on human capital development, partly as a result of those first two, and I'll come on to some of those developments as I go forward, and finally on regulation, because as sustainability and the fourth industrial revolution go ahead, then regulation needs to shift and change and keep up to date. So coming on to those themes and talking in a bit more detail about them. Sustainability. Financial centers certainly do see themselves as needing to take a leadership role in relation to the development of sustainable finance and in relation to addressing those of the Sustainable Development Goals, which are most closely aligned with the development of finance. And the kind of things that financial centers are doing, leading multi-stakeholder groups. Take an example from Luxembourg I'll be talking about later. They convened a group involving the private sector, the public sector, and the third sector, the civil society sectors, to address what Luxembourg needs to do to make itself truly a world-leading sustainable finance center. And that's a key role for financial centers, bringing together multi-stakeholder groups. Developing regulatory roadmaps so people know the direction of travel and people can plan their business in terms of sustainable finance, knowing how regulation is likely to develop. And that includes things like disclosure, but also includes the development of new types of financial instrument. Raising awareness of green transition dynamics is certainly something that some financial centers see as their role, making sure that people in the finance sector are really up to date with the position in terms of green transition. And this means different things in different parts of the world. If I were talking to you from Astana in Kazakhstan, who are heavily reliant on very polluting coal for their energy, their green transition starts by moving to gas before moving to renewables. However, if I was speaking to you from other parts of the world, the green transition is much more such as we've seen in places such as Vietnam, is how do you move quickly to renewables across the board. And financial centers need to be aware of the local green transition dynamic. Supporting the development of new financial instruments, so both stock exchanges, regulators, making it possible to raise new types of bonds, new type of instruments to raise money, and supporting international cooperation, because it's no good one financial center being the greenest there is if everyone else is sticking to traditional finance. My personal hope is that one day we stop talking about green finance because all finance is green, but that's a longer term ambition. But as I say, we do look 100 years ahead. Second, the digital revolution. Financial centers have been central to encouraging regulatory change, whether that is providing sandboxes or choosing not to provide sandboxes, and the different approaches taken in different centers is important in terms of how you decide where to place your business. The provision of fintech labs, many financial centers now have startup business centers where new fintech businesses can get either free or cheap accommodation while they're in startup as an offer to encourage the development of new business. Supporting the development of digital ID and know your customer systems. Financial centres do take their responsibilities to address potential fraud seriously. Some financial centres have been very strong on encouraging the widening of access to financial services through mobile platforms. And remember, even that does contribute to the Sustainable Development Goals, where the unbanked and people without access to financial services are one of the targets of the UN goals. And the key part here is that financial centres see their role as ensuring that regulation does two things. They both incentivize innovation, but also ensure customer protection. And trying to meet the balance between innovation and customer protection is really a key challenge for regulators across different jurisdictions. Human capital development. I mentioned sustainability and the digital revolution as being the key challenges at the moment. And all financial centres I speak to realise that their existing workforce is out of date. They need refresher training on sustainability and green finance. They need training and upskilling on digital finance and new ways of doing business. And so the four key planks for human capital development is attracting and developing talent. That's working with the university sector, sometimes working with the school sector, sometimes working to ensure that you can attract overseas talent through having attractive visa systems and other ways of recruiting talent from overseas. I've talked a bit about upskilling, but retaining talent in your infrastructure is really important, and as well as upskilling, reskilling. So you need people doing more and better, and you need them reskilled to address the needs of the future. In terms of the regulatory phase, financial centres are really good at fostering links between regulators and market participants. I mentioned that multi-agency approach, which financial centres are at the heart of, and they want to be at the heart of that in terms of regulation as well. Certainly looking at the development of international regulatory standards, something that has plagued finance sometimes is the fact that you need to work across different regulatory environments, and the more that they can be brought together, the better. There are some really good examples of regulators across different jurisdictions working together and accepting each other's judgments on the regulation of the finance industry. I can only see that continuing to develop. Financial centres certainly see their role as providing regulators with commercial insights. Regulators are not part of the commercial market, but they need to understand that market in order to get regulation right. And finally, financial centres are about encouraging competition, and so they will be looking at regulation which encourages competition in order to innovate, in order to bring new products to the market. I'm going to move on to talk about two particular financial centres, Singapore and Luxembourg, and they've both got a really interesting story to tell, I think. I'll start with Singapore. So Singapore, of course, was traditionally a trading centre in colonial times. It was the place where the British, who were the colonisers at that time, focused trading activity across that part of the world. But following independence, there was the creation of the Asian dollar market in 1968. And this came about because in Singapore, they noticed there was a gap in the time horizons. So there was a US market, there was a European market, and in between that was a space when the US markets closed, the European markets were closed, but Singapore could trade. The next significant piece of development was the introduction of the Monetary Authority of Singapore Act in 1971, and the MAS continues to be both the regulator and the promotion agency for the Singapore Financial Centre. and then the introduction of a stock exchange in 1973, which had developed into SGX, CIMEX, and CESDAC. And the reason I've gone through those in stages is because Singapore is a really good example of a financial centre that's been through staged and planned development, which they seem to be particularly good at. In 1985, they put together an economic review committee, which included people from the public and the private sectors, and they spent quite a lot of time developing their thoughts about where the financial sector in Singapore should be growing. And they listed, these areas of risk management, fund management, capital markets, unlisted security markets, and others for the focus for their development moving forward. And they knew they couldn't do it all at once. They knew they had to plan with this and take it through. But it's been a case study in how to identify opportunities and then take advantage of them. And the reason for this happening in the mid-80s were partly some internal analysis they'd done about where they could go, but it was competition from other centres, particularly Hong Kong at the time, which led them to believe they needed to expand their offering if they were going to be successful in the longer term. And Singapore now has 5 key sectors, as they would describe them. Banking and finance, very big. Asset management has taken off enormously and is now a large part of the Singapore financial market. The capital markets are very strong. Later, in terms of Singapore's development, but insurance and reinsurance now very big. And fintech has been a clear focus for Singapore over the last 5 to 10 years. If you haven't had the opportunity to go to the Singapore FinTech Week, which happens each year, it's really quite something, and it really has attracted a lot of interest from across the whole of Asia. And Singapore therefore see themselves as the Asian centre for fintech. Other people would disagree, but they would see themselves in that way. And so how have they done it? What are the key strengths of Singapore? First of all, the business environment. It's very open. It's well regulated. It's easy to set up business in Singapore, and they want to keep it that way. The infrastructure is good, and it's competitively priced in relation to some of its main Asian competitors. And they are looking at Hong Kong, and they're looking at Seoul, and they're looking at Tokyo, and they're looking at Busan when they look at their competitors, not so much obviously at mainland China. They have a skilled workforce, and this is by plan. This is designed in Singapore. Over a period of around 20 years, Singapore have invested heavily in their university sector in terms of financial skills training. They've invested more recently in reskilling training, and they've made sure that they are attractive to expatriates. And so they have a range of visa opportunities, particularly those who are highly paid and highly skilled, but it is very easy to enter the market as an expatriate. We'll have to see whether that continues, because COVID has made a difference. In Singapore, for the first time in a long time, the number of expatriates working in Singapore has dropped slightly, and depending on how the world continues to change through virtual and digital connection, and in terms of travel and openness of different societies, it will have an impact anyway on how attractive Singapore and other centres are in terms of people coming to work and live there. The policy success, I think, for Singapore comes from being really clear about the sectors which they've targeted. I've mentioned the Asian dollar market and asset management in particular, and that targeting is something they continue to do. Green finance is in their sights at the moment. Long-term planning has been a key part of their work. I mentioned that they've been consistently good, I think, at assessing their strengths and weaknesses, looking at where they have gaps in their financial sector offering, and developing a regulatory framework which enables development of financial services according to their plan. And finally, as a strength, I'd really say policy co-creation between the public and private sectors has been a real strength in Singapore. They are good at bringing together groups and people to work together. Moving on to Luxembourg. I'm sorry this is a very swift kind of rush through quite a lot of information, but we'll have plenty of time to have a discussion. Luxembourg was known as a steel country. It produced steel and was known for heavy industry and manufacturing. But in the 60s, they shifted and intentionally started developing a financial center. In the 60s, they became home to US and European banks working in the Euro market. In the 70s, there were some international credit difficulties, some would say a crisis. Luxembourg banks moved away from international credit towards private banking, asset management, and the investment funds industry. And they proved themselves very successful, building on the international links they already had at developing international business. In the 1990s, German banks in particular entered the market in Luxembourg, and they became known for creating innovative financial products. They put a lot of effort into that. And the financial cluster in Luxembourg developed more sophisticated, less regulated funds. It developed insurance and reinsurance businesses and has continued to grow. And just taking a look at Luxembourg now, there's 120 foreign banks from 26 countries operating in Luxembourg with 508 billion euros of assets under management in private banking. And asset management, Luxembourg funds are now distributed in 77 countries, 5.9 trillion euros assets under management. Many more insurance companies than there were even only 10 years ago, and 37,000 listed and tradable securities on their stock market. So they're a very serious player in terms of the financial world. And Luxembourg, I think, has been good at innovation. It was early into sustainable and green finance, creating the first green stock exchange. And it's got the largest share of the green bonds market, 21% market share of ESG fund assets. And it's really done well on sustainable finance. It would see that as one of its key strengths. Like many other financial centers, it has a fintech center, the Luxembourg House of Fintech, or LHOFT, as an enabling hub for new fintech business. It developed its renminbi business early, as it acts as an EU hub for Chinese banks, has a leading global market share of investment funds investing in mainland China, and it was early into Islamic finance and is the leading center in the EU as an Islamic fund center. And this is not by accident. Luxembourg would say that they are planned, that they are horizon scanning all the time. And so again, Luxembourg's strengths, human capital, first of all, its workforce is multilingual, highly skilled, drawn from neighboring countries as well as from Luxembourg. I think there's around 200,000 people commute into Luxembourg every day from surrounding jurisdictions. Certainly a stability of its economy and its labor market. And stability is something that really helps finance, obviously, to develop and industries to build themselves. It really does pride itself on being early to the game, of being a first mover, the first green exchange, listing of the first in-sum bonds, the early adoption of UCITS directives. It sees itself as being ahead of the game in new developments in finance. And it has a really excellent infrastructure. Its digital connectivity and transport connectivity is world class. So what lessons can we draw from where financial centers are heading and the case studies I've mentioned? I guess the key takeaways: invest in talent has to be, I think, top of the list. Those financial centers who are really doing well and motoring are those who have a real depth of workforce, highly skilled, talented, innovative, and they reskill and they upskill and maintain that. The second one, sector by sector growth. Clusters of business certainly do drive innovation, but if taking both Singapore and Luxembourg as case studies, if you have a number of banks get together in one place, you will have innovative banking. And next, you can choose a different area of development and get some asset management companies to really focus and provide a cluster. Next, get some insurers, but cluster, and you will get innovative service. And there's lots of strong academic evidence and research evidence that clusters drive innovation. Third, having a stable, trusted regulatory and legal system is an absolute necessity. You can't be a leading financial centre, I would argue, unless you have that in place. And a good business environment and perceived lack of corruption. They really matter to bringing together a large number of financial sector players. Bringing together the public and private sectors to develop strategy seems to be a really key part of successful financial centres. And financial centres generally see themselves as having the role of bringing together multi-agency work. And finally, spot opportunities in the market. Easier said than done, but actually if you're looking all the time about where the new opportunities might arise, then you're more likely to find success going forward. So what's the future vision for international financial centres? And again, this is based on some discussions I've been having with a number of financial centres. Certainly green, prioritising the sustainable economy, smart, able to understand and manage increasingly complex technological approaches to finance, to open up markets and offer improved services, innovative and client customer centric, a regulatory and legal environment that, as I mentioned before, balances regulatory costs, protection of the public, sustained innovation. Digital, certainly, we now all go to our phone for almost everything we do in our life, and most of the things we do in our life have a financial transaction somewhere in the background. Inclusive, being fair and open to all comers with good support for startups, and offering a good quality of life. In order to attract high-performing people, you need to offer them a life which is worth living in their centre, making the most of the particular strengths that you have in your centre. I'm coming to the end, but 5 truths about international financial centres. This is based on our 20 years or so of thinking about these things. You can't be an international centre without international people. You need both the homegrown workforce and other people coming to work with you. Successful people want to live in successful places. People gravitate to clusters, and as I mentioned, clusters are really important for innovation. Reputation is vital. You can ruin your reputation in 5 minutes, and keeping a really strong eye on that is really important. And finally, trust. It's the glue that holds relationships together, and finance, if it's about anything, is about building and maintaining relationships. And so ensure that you are trusted, and that's one of the ways in which you'll succeed. So I've come to the end. I've put my email on this slide, so if anybody wants to get in touch, please do. I'll drop it into the chat as well in a minute. But thank you very much.
Thank you very, very much, Mike. That was an absolutely rich and insightful presentation. Before your session, I had a series of questions. I thought you thought about them before the presentation, because you answered pretty much all of them. I had 5 and I'm saying, but he answered all. But I know the audience has a fair amount of questions. We do have one in the chat. So let me just take a look at it. I'm going to invite persons to put their questions in. And let me go to the chat where I see Richard Young. Thank you so much, Richard, for kicking us off with your first question. And I'd like to invite Richard, if you can come to the stage, unmute, and pose your question to Mike. So Richard, I'll turn it over to you. And Mike, I know it will be an interesting one.
Yeah, okay. Thank you very much, Amoy. And congrats again to the CGI for organizing this kind of conversation. I can't remember whether I met you before, Mike, or we chatted, but you know, the big vexing issue that small countries have is this whole question of anti-money laundering and counter-financing against terrorism. And we all know the impact of that if it is identified. And the truth is, the small countries are the ones that get all beat up. I mean, that whole Ukraine thing recently has demonstrated. I don't know if London is going to stay in the top spot with the kind of funding and financing that is taking place for these Russian guys. I didn't see you talk about that, but you covered other reputation and legislation. Luxembourg is one that I kind of associate, very sophisticated, lots of little banks, offshore banks, not very much transaction taking place, but you know, just transfers and that kind of stuff. So just wanted to get your perspective on that.
I think the issue of anti-money laundering and financing of terrorism and so on, it is important, I think, to the trust that people have in the financial sector. There is an argument, however, that the costs of compliance with the current systems that are in place are too high, and I think the trick going forward will be, whether it's the EU or whether it's the US or whether it's UK regulators, that we find ways to make the cost of compliance cheaper, which is a way to enable, in a way, smaller players to continue to operate in the market. I don't think financial centres feel generally under attack, but I think you're right that smaller centres, island centres, whether that is Jersey or the Isle of Man or Caribbean or Mauritius, have all found it more difficult to persuade regulatory authorities that they are totally able to manage these things compared with the larger centres based in the big cities. So I think it's here to stay, but I think the lobbying effort needs to be to make the cost of compliance on these things manageable. And I'm not entirely convinced at the moment that that has been the focus of the regulatory authorities, and I think it needs to bring that more into their work.
Thank you.
Thanks very much, John. Thanks so much, Mike, for answering that question. I know we have another question in the chat, but I do want to bring John up before we take that question. So Fahim, I am going to come back to you. And John, are we ready? I know we got to unmute, so just give me a few minutes to introduce Mr. John Outride. John is currently the Chief Executive Officer of the Trinidad and Tobago International Financial Center and is responsible for leading the company as it executes its mandate of driving digital financial services adoption across all sectors. So Trinidad and Tobago can become a premier location for fintech-enabled services. He has over 10 years of senior management experience and has worked for firms such as EY, PricewaterhouseCoopers, and IGOP-TT. He has supported both public and private sector institutions with strategic guidance on fintech strategies, as well as the modernization of public financial management systems of various governments throughout the region. Now, as I said, John's full bio has been either shared or will be shared. So at this point, I would like to bring John up. Please give him a hearty welcome as he delivers his presentation. John, the floor is yours.
Thank you, Amoy, and good afternoon, everyone. Mike, very interesting presentation. And just for the audience's benefit, we did not coordinate presentations at all, but I think what I have to share would be very insightful, as I'm going to give it a name, a case study in the making for Trinidad and Tobago, because a lot of what you shared, just to give the audience some backstory while I'm bringing up my presentation. So the IFC, the Trinidad and Tobago IFC, our mandate was changed exactly 1 year ago in April 2021. And exactly what Mike was saying in terms of one of the key things an IFC needs to have is a focus. Can't be all things to all men. So the focus basically was shifted towards fintech because globally everyone, participating on this call recognizes the value and seeing all the growth and the opportunities that is taking place, particularly in the fintech industry and all of the unicorns that are coming about. So what I'm going to share very briefly with the audience today, coming off of my presentation, is really in terms of what has been done to date with the Trinidad and Tobago IFC and our journey in terms of transitioning focus to a fintech and as well as advancing Trinidad and Tobago towards a cashless society. So Mike, I know you're finished your presentation, but I would be glad for your comments and feedback after this short presentation. So just very briefly, just to bring everyone up to speed, as I mentioned, the Trinidad and Tobago IFC, our focus has been shifted twofold. One, to establishing Trinidad and Tobago as a fintech-enabled hub, and in doing so, establishing a cashless society vision for our nation. So at a high level, just to give you some clarity, what do we mean by a fintech-enabled hub? As Mike was identifying, when you look at all of these different regions across the world, and you look at the Caribbean region here, and you lump the Caribbean together as a sort of emerging market, it is what I would call quite an attractive place, particularly for large entities who are looking to pilot innovative solutions, because we have a very mature market. You know, we have good innovation, we have good literacy in people, we have all of the good factors in terms of what you're looking for a test case when you're looking to launch your solutions, etc. And when you look at the total Caribbean population, it gives you a small city size. So for anyone who is in the business of being disruptive or innovative versus going to Singapore where everything is so saturated and the competition is so high, why not come to the Caribbean to pilot your solutions? So it's based on that vision, the FinTech Enable Hub is establishing where what we are trying to do in Trinidad and Tobago outside of the existing conditions that we have is to really invite and enable the right infrastructure that will allow these leading digital finance capabilities for these international companies and local companies to be able to connect into. So on that note, our sort of mandate, we have broken it down across 3 key teams. And from an IFC perspective, the reason why these teams exist is while we are sort of establishing and repivoting the company and the focus towards a FinTech Enable Hub, we are also taking control of the ecosystem because we need to be the key driver across all of these fronts, right? And what do I mean by that? So promoting and advancing financial inclusion. This has been something traditionally that has not had significant focus within Trinidad and Tobago. While we do have a large number of commercial banks, we do have a large number of financial services and various products that exist on island. One can argue that we don't really have a large percentage of the population that are really included, or even these financial services are fit for purpose, because in a slide that I have coming later on to the presentation, while our access to services may be high, our usage is quite low. And there could be a number of reasons that could inform. So this is one of the key things that we are focused on the IFC, sort of trying to understand what are those key barriers. So again, that we can work with the policy decision makers to design strategies in order to effect this. One of the other key areas, again, in terms of earning the ecosystem and really moving towards that FinTech Enable Hub, is basically working with the government for the government to basically lead by example. So traditionally, you would see in a lot of different countries and jurisdictions, the private sector is the one that's usually leading through innovation. But in every scenario, it's unique, right? And Trinidad and Tobago is unique as you can get. And one of the key things we saw coming into this thing was, again, as I mentioned, we have a very robust financial services sector. We have some of the largest financial institutions in the region that have been domiciled here. However, the drive towards innovation hasn't changed that much, particularly as it relates to digital financial services, fintech, that sort of thing. So what we are aiming to do is to really lead by example through the government by basically setting up a very, I would say, ambitious roadmap to digitalize all payment services across the government of Trinidad and Tobago. And we have already started on that. We started back in January of this year. Our goal for phase 1 is moving to December, where in the first instance, citizens have the ability to pay outside of cash using online cards, using fintech services, and this is where we have been working on. And the third aspect of that is, as we are using the government's use cases, size and scale to drive this roadmap, is where we will be engaging with the fintech sector, both locally and internationally, to then provide these capabilities. We'll also be working with the financial services centers in Trinidad and Tobago, i.e. the banks, to provide that sort of capability. So all of these things, we are sort of set aggressive targets for ourselves because, as I mentioned, the mandate was changed back in April 2021. And that was largely due to the shift that you were seeing brought on by COVID and brought on by the need to have these things going. There's a lot of regulatory changes that have been taking place globally. You have a lot of body shocks that have been hitting a lot of supply chains globally. People are no longer relying on India and China and so forth. They are looking for more nearshoring opportunities. They're looking for capabilities close. They're looking to be resilient. So we want to be able to capitalize and take advantage of that opportunity. Yeah, so that's very quickly. Why are we doing this? As I mentioned, particularly by working with the government to play a role, because the government can be a catalyst for innovation. Particularly in Trinidad, the government is the largest employer, it is the largest entity, over 40,000 public servants, many different use cases across. So our goal really is to use these use cases to develop these solutions and these systems. So one, it drives the inclusion because citizens now have the ability to interact with these services. It gives the banks and the fintech companies the business cases to make the investment for. And it also provides similar business cases for our leading international providers, the Visas, the MasterCards, the Stripes, all of these leading fintech players across the globe to now look at Trinidad and Tobago to really be a testing ground for their own international capabilities so that they can use Trinidad as a jump-off point, particularly as they seek to expand within LATAM or even the Caribbean region as a whole. So our overarching vision for all of this is to really position Trinidad and Tobago as the first fintech-enabled country within the region, offering digital financial capabilities. So again, somebody who is an international fintech who's accustomed connecting with leading innovation or leading capabilities, particularly in Asia, should be able to have that same access to infrastructure in this region when looking to do business. So that's really where our focus is. And as mentioned, particularly while we are driving this, the idea we will be getting some intrinsic benefits. And I know I heard some of the presentations mentioned, particularly around this UN Sustainable Development Goals and digitization. So there will be some ancillary benefits as well. Apart from providing economic opportunity, we will also be providing better efficiency in the government services, improving public welfare, and as mentioned, increasing economic activity, particularly for not just the financial sector, but for citizens and any ancillary players that are also existing, especially our nascent fintech sector, which right now is currently growing. We do have a fintech TTIFC association that was established by the AFC about 2 years ago. We currently are up to 75 members, which is very encouraging. And every month there's a request for more and more membership, both from the international and the regional community. So again, the outreach and some of the initial work we have been doing seems to be connecting with this audience. And I saw particularly, which was very insightful, I wasn't aware of Luxembourg's FinTech Hub, which is good because that is one of the key things that in my readings and in our research, we realized that you need to have. You need to have a home for FinTech to really demonstrate, and to really have that fragmentation be combined. So we are on our project right now to be establishing a physical FinTech hub here at the IFC. And the idea that this FinTech hub will be able to provide that sort of collaboration between the regulators, between the government, between the FinTech sector, between the providers, and to really be a home to basically innovate and incubate and ideate all of these solutions. The vision is somebody who is coming from JP Morgan and visiting Trinidad and Tobago. On your stop to the tour, you should be able to come to the FinTech Hub, understand the local capabilities, understand what we have on island, and really use that as an opportunity now to establish the incubation that is required to really develop this sector. So in support of that, we have actually started our outreach, and we will be having a FinTech working group session next week a 3-day working group between the regulators, between the government and the fintech sector. And the outcome of this is to really sort of, again, as I saw in the presentations, as a true IFC, really be the bastion of alignment and to provide the sort of direction in terms of what we need to move forward towards a digital economy. Yeah, and as I was mentioning before, again, from a financial inclusion standpoint, there isn't a lot of data that exists in Trinidad and Tobago. The last study the IFC participated in, which was back in 2017, but as I mentioned, we have high account ownership, 76% in 2011 to 81% in 2017, right? 45% of that is housed in credit unions. And that tells an interesting story, right? In terms of the credit unions having a large percentage of that. And the fact that a lot of 60% of adults actually owned a debit card, but roughly 1/3 didn't make any transactions in the card back in 2017. So again, from a low usage, I don't think much of that has changed. Even coming through the COVID pandemic from a Trinidad perspective, we saw the challenges in getting social relief grants out to citizens, and the fact that a lot of this had to be done by check and so forth. So this is a key challenge that we need to sort of drive as a center of focus, because we do know fintech plays a very large role when it comes to financial inclusion. And just to kind of provide some context, again, the reason why we are going about, and we will be starting this financial inclusion survey in June, would be really first to understand the current levels within Trinidad and Tobago, for to collate that data, to provide and develop a development plan, to really understand the existing gaps and barriers that are hindering financial inclusion nationally, and to help us identify what might be some key strategies for citizens, governments, and businesses to really adopt fintech and payment solutions. And my last slide before I leave you, and again, coming back to some of the things that were mentioned in terms of collaborations. So the IFC, we just established collaboration with the United Nations Capital Development Fund, who basically operating through a European Union funded program, about 14.5 million euros for a new global initiative called Leveraging Digital Finance to Increase Resiliency of African, Caribbean, and Pacific countries. So the TTIFC will be leading that initiative with the UNCDF in Trinidad. And this will allow us to get access to technical assistance, capacity building, again, providing even more support and getting more insights in terms of how we need to lead on our own agendas. So thank you very much for allowing me that brief presentation. And Mike, I open the floor up to you for comments if there are any others.
Thank you very much, John. Excellent presentation, excellent insights. I think we've learned a changed perspective on what the TTIFC is doing. And I know Mike wants to jump in to provide some of his feedback on the trend and where the TTIFC is going. So Mike, would you like to make some comments on feedback to John's presentation? And then we will take some questions from the audience.
Very happy to. I mean, I think John, you're in line, I think, with the direction of travel. So the strategy you set out looks well thought out in terms of where you are at the moment in Trinidad and Tobago. It may be worth having some discussions with some other financial centres, smaller financial centres who are also interested in this kind of thing. I'm going to put into the chat a link to a launch event for a report we did with Labuan International Business and Financial Centre in Malaysia last year, which is entirely focused on how do you facilitate financial inclusion through digitalization. So it's a topic which is of interest, particularly in economies where financial inclusion is not yet going through the whole economy. But I think the approach you're taking looks very good. In terms of building a fintech hub, there are so many different models out there, but the key things which people tend to see is that there's a very low level or free rent for office accommodation for startups. Fintech centers, I've been to a number of them across the world, tend to be very collaborative spaces. There's an awful lot of open space where people can move and bump into each other and share ideas. And the other bit of it is the regulatory system. So if you go to somewhere like Dubai, the license to operate as a fintech is a fraction of the cost of a license to operating any other kind of financial business, if you come and work in their fintech center. So I think there's things you can probably learn, but I'm sure you're in touch with many others who have been through this learning curve. But I think you're on the right track indeed.
Thanks, Mike. And yeah, and that's another comment from what you were saying there, because and even looking in terms of how we line up our own strategy, right? So there is no one size fits all, right? It really depends on everything that has been going on. And for my short time being at the AFC, which is really a couple of months, what I can say, and I mean, this is indicative of, I say, Trinidad and Tobago as a jurisdiction as a whole. We do have a lot of good things going for us. The challenge has always been on the execution layer. So at least from a starting point, we are not trying to reinvent the wheel by any means. We are trying to leverage on the existing structures, on a lot of the existing work that would have come before, and really focus on that execution. That is my sort of key takeaway in terms of the progress we have been able to make. While a year is still a long time, and there's a lot of things could have been done a lot, I would say, more aggressively. We are confined to the rules in which we operate in, but at least I can say this time, Trinidad and Tobago is open for business from a fintech perspective. We just really want to make sure that we position ourselves the right way.
Thanks very much, John and Mike. We do have a couple of questions in the chat that I want to get to. One from Jacqueline Kwamina: great initiative by the TTIFC for Trinidad and Tobago, but how does that make us an international financial center? So I'll throw it out to both of you. John, you can start.
I could give my perspective, and obviously I would leave it to the key expert here, Mike, in terms of our interpretation from that perspective. So as I mentioned to you, in terms of the FinTech Enable Hub concept, and particularly in my discussions with a large number of FinTech entities, international, both from Singapore and other jurisdictions, and as I mentioned, the Visas and the MasterCards of the world, what I realize is, even from an infrastructure point of view, even from a capability point of view, so it's concepts such as eKYC and tokenization and advanced fraud detection and all these different types of capabilities, they are not really in a mature state by any means across any jurisdictions. And these companies are continuing to innovate, but they also have the same limitations. They can only innovate as fast as the jurisdictions and the partners that they have are willing to innovate too. Mm-hmm. So one of the key things that we are looking for is, if we can create the right environment to allow for that innovation at scale, what that will do is, as I mentioned, all of these international companies who are looking for what I'm calling proven grounds, proof of concepts, to launch their solutions, launch their products, have the case studies, if we can create that environment for them, then what that does is we will have more and more international providers looking at Trinidad and Tobago to really set up their sort of use cases here. So we become a showroom for, let's say, a fintech in Singapore who is working on a digital wallet type of solution, right? And that is something that could be launched and it could be utilized here. So we become a proven ground, or we start to be the consumer for all of these new innovative products. And then these companies now use us as to say, hey, this is what we did in Trinidad and Tobago in the case study, or this is what we did in the Caribbean, because again, we want to use Trinidad and Tobago as the jump off point. So we really want to be the feature for the Caribbean. So that's how our interpretation is.
Thanks so much, John. Mike?
Well, I think an international financial center for me is any financial center, and by financial center would mean sort of somewhere where there's a cluster of financial sector industry, which deals with cross-border transactions. I mean, that's really, and not just once, as it were, but does that consistently. And I would count anywhere that has businesses which deal with cross-border transactions as an international financial center. You may not be a global financial center, however, and that's the kind of the goal that everyone's looking at.
Thanks so much. I just want to take, thank you so much, Mike, for that. Fahim's question, we had that earlier. I'm not certain if Fahim is still with us. I know he had to pop out for a bit, but if Fahim is still here, would you like to come in to the room to ask that question, Fahim?
Hi, sure.
Great, thank you.
And good afternoon to everyone. Excellent session and very interesting content. My question was, in terms of the key takeaways that you identified, I'm wondering if we can actually see an IFC growth or development in the absence of any one or combination of those takeaways. And just based on John's presentation in terms of the change in the mandate, I'll just add this one on, I hope you don't mind. I got from listening to the presentations, I saw Singapore leverage the time continuum to close the gap in the 24-hour trading. I saw Luxembourg with the green trading specialization almost. Labuan, I recall in 2004, 2005, were trying to champion as the Islamic finance hub for Asia. So I'm wondering if there is that necessity for a specialization for our jurisdiction, and what directions would that specialization be? Yeah.
Okay. If I take the first part of your question, Fahim, I think that the answer is you can have growth in an international financial center if you have some but not all of the the key pillars in place. But I don't think you can be a successful competing financial center against whoever your competition is, whether local or internationally, unless you are making progress on all of those fronts. Businesses really don't like doing business in places where, for example, they don't trust the legal system. If they're not sure that they can resolve a difficulty in contract through arbitration successfully, then the premium for them in terms of the cost of doing business or the cost of insuring their business may put them off. If you have excessive bureaucracy in doing business, it just means that people who want to put business into your region may go to the neighboring country rather than to you. So you can have growth, certainly, without all of those things being in place. But if you want to be really successful and compete successfully against other centers, you need to pay attention to all of those key pillars that I set out.
Great. Thanks so much, Mike. We do have, John, you wanted to say something?
No.
Okay, all right. We do have another question in the chat, and John, you may be up. If the TTIFC, if Vinny is in the room, I'd probably want to invite him to just pose the question. If not, I will read it out for the panel. Okay, so if the TTIFC is looking to make Trinidad and Tobago an easier place to do business, then does that mean we are going to change the laws to suit?
Okay, so that responsibility will not be us alone. That is definitely a larger elephant. However, one of the key things that is obviously a critical factor, ease of doing business, right? And I know Mike mentioned it, particularly from a bureaucracy perspective, right? But one of the key things that we have been seeing, while it's not particularly within our shop, as we continue to work with these agencies. So let's take, for example, our Inland Revenue Division, right? Our Customs and Excise Division. So as we are working with them and helping refine the processes and move into the implementation to provide these various payment systems, we are seeing the process improvement, and we are seeing opportunities which, again, are spurring on additional projects. Because one of the key things and one of the key takeaways and experiences we have seen, particularly as we have been working towards this roadmap from digitalization, is, while payments is in front of us, and this is obviously a huge step in moving things forward, because the way Trinidad is sort of situated and where we have all of our government agencies centralized in Port of Spain, and you have a lot of rural communities, you have a lot of people who will do business, and particularly the international community. Because again, you want to set up a business, you want to register a company, registrar general, you can't fly someone or hire an attorney to go and make that payment, stand in line for you to make that payment, right? These services must be extensible and must be accessible. So we are sort of kind of at least helping to drive some of that transformation that may not have been particularly looked at. So we are unearthing some areas where, while we are, for example, working to expose the single electronic window then to be able to allow for payments in bureau standards and all these different things, they are now seeing opportunities to move some other aspects along. So I am seeing it as a sort of catalyst to really sort of enable those programs that weren't typically on the agenda before then.
Right. Great. Thanks so much, John. Can I invite Peter? Any comments, Peter? Am I putting you on the spot, Peter?
No, not putting on the spot. It's actually where to start, because I'm quite frankly overflowing with a few ideas and questions. But look, I think, as we discussed in our preparations, I think it was a great idea to include Singapore and Luxembourg as smaller nations on how they built sustainable competitive advantages for their own countries and added value to the world. And now the key thing is that they're actually not just a place for a tax break or to structure something or to be a place to register an offshore company or trust. They are actually in control and managing the money. And now they, in fact, have thriving, particularly Luxembourg, thriving stock markets, bond markets, and in the management position of those funds. I'm just trying to sort of gauge, what are your thoughts on steps the Caribbean should potentially take where they're in the management position, or either A, attracting onshore businesses for entrepreneurship, but B, actually become the managers of wealth like Luxembourg or Singapore? And are there any lessons we could learn, not just from Luxembourg and Singapore, but even the city itself that may be wanting to reinvent itself in some way, and it's in a new relationship with the Caribbean?
I think that was aimed at me, but John will no doubt have thoughts as well about how we move on. I think that a key issue here is the sequencing. The reason that Luxembourg and Singapore are in this position is because they have spent a reasonably long time attracting businesses to their location, and this has the clustering effect. People like to come and work where places they see as successful. And they've been able to build, therefore, a larger and larger sector with more assets under management, and that gives flexibility for a financial centre to regulate for alternative investment funds and different ways of doing business. But having scale, is a good starting point actually to then take over management. So really, I think for smaller centres, it is about attracting business to come to your centre and locate there, whether in terms of a full relocation or having a branch, having a stake in the ground in terms of that part of the Caribbean. But there has to be, I think, first of all, that grow a substantial enough set of businesses that the people see it as a successful place with a reasonably large set of AUM. In terms of the cities, the City of London, we sit in a very fortunate place in the City of London in terms of financial services because of our history, and particularly because London started as a trading city, and therefore has built up extensive range and size of financial services. Generally, I think people in London are willing to do business with anyone in the world, just about, but not Russia at the moment, please. And in terms of the Caribbean, the best way I can think of that there may be scope for developing further links is for the regulators to be talking. It will be really important, I think, if the regulators are starting to understand each other's regulatory systems and to recognize each other as regulatory systems. Why not build a fintech understanding with the Financial Services Authority in London, so that there can be some form of joint recognition or some easing of the regulatory burden for people who are already regulated in one or other jurisdiction. I think that really is worth thinking about, particularly for new businesses in fintech, so that somebody who starts off in Trinidad and Tobago, does well in terms of developing a fintech offering across the Caribbean, maybe can get access to the European market and the London market more easily than they otherwise would. So there's a thought to take forward.
Thank you.
Thanks so much. Thanks so much, Mike. Oh, Peter, you wanted something else? You wanted to say something else?
Okay, yeah, I could put one more, and I'll reframe because I asked this question of David Herman in our next gen, and this can be to both John or Mike. Either one of you would have a view. Let's just say if you were given a budget, like consider it the United Nations of the Caribbean, for a special initiative to create a new financial and entrepreneurial center, and you were given access to a substantial budget, let's just say 100 million, you're president for the first year, how would you want to interface with the other financial centers and other key institutions, family offices, investors in the entrepreneurial community to make that happen? What would be some of the key steps that John and Mike, you would think would be fundamental to get that rolling for the benefit of the Caribbean?
John, you go first.
Well, it caught me by surprise. Nobody has ever offered me $100 million. You always get that question. What would you spend it on first? But no, very, very, very interesting. Because even what Mike was speaking to prior, particularly on the linkages, because sometimes when we think about, building these things, particularly in the Caribbean where we are very small, very immature, a lot of the focus sometimes is inward, and we don't really look outward in terms of, how do we establish ourselves as not the sort of dominant partner, but really a collaborative partner with other leading jurisdictions, So one of the first things I would say, particularly if that was the case, and I mean, this goes back just to the whole concept, from a CARICOM perspective. So it's really about having a united front. So particularly for something, if we were targeting fintech and we were looking at really, as I mentioned, from the Trinidad and Tobago perspective, but we were looking to really sort of be that fintech hub on the Western Hemisphere, on our side of the world. The first focus would really be in terms of acquiring scale. So before I look outward, would be really looking towards my other CARICOM partners, because when you look at the Caribbean, we have strengths in different jurisdictions, right? So particularly from the stability of the financial system and the size of the economy, we have Trinidad. When you look at the activity and you look at the growth, you look at Jamaica, right? And as mentioned before in the presentation, when you look at St. Kitts, even St. Kitts is probably about 100,000 people, and now their signals, their intent in terms of they want to participate in crypto, So when if you look at the Caribbean as one holistic center, where we could take our various strengths and our advantages and sort of merge that into one sort of economic model, I would think that would be my sort of starting place. Probably need a little more than $100 million to establish that, because I'm sure we would have spent close to that for other sort of programs and initiatives like the single market economy. But I would start with a consolidation effort and really using our size and scale to consolidate that to really be a sort of good partner for other IFCs in the world.
Okay, I'll give you a single idea. Establish the world's leading research organization on wealth management in Trinidad and Tobago, or in the Caribbean. The reason for saying this is that I mentioned before the development of talent is hugely important, but also that question of niche and specialism. And it's the kind of initiative, building a research center or something which attracts people to come. And it doesn't actually cost 100 million to set up a research venture and get a professor who is world leading to come and work either full time or some of the year in your area, and attract to them some of the leading brains who are thinking about the development of wealth management services across the world, because they want to come and work where the really leading edge work is taking place. So that's a free idea. If you want to pay me for it afterwards, you can, but at the moment it's free.
Yeah, and just to add to that as well, Mike, as well, Singapore, of course, have with their universities, they've been very, very forward thinking in forming the Family Business Alliance. So, and they're legitimate, serious, higher barriers to entry, number one. And number two, MAS, their regulator, have also got a strong family office initiative, and they put also a special arrangement and incentive. There's a $50 million and a $200 million program for family offices to enter. Some of them, of course, a big issue is permanent residency and other things. So if they pass through that, they've got a full program that goes through that, and there are other incentives that you could sort of review. I did touch upon them in a previous wealth transfer discussion, I think, what we had, but those are the sort of, it's very much aligned with what you just said, Mike, on that, and that would be the lower budget version of it. But I totally agree, John, to actually scale it after you've got that foothold. It would need a lot more than 100, but it's not a bad start.
Thank you so much, Peter, for those insightful questions and responses, Mike and John. We do have a question in the audience. I'd like to invite Richard to the floor. Richard, could you unmute and let's hear your contribution?
Sure. Thanks a lot, Amoy. I was going to, in fact, really take up Peter's offer. And Peter, I would not even ask for US dollars. If you give us 100 million TT, which is about 15 million US or 10 million pounds, I think one of the first things we have to do really to get this whole movement going too also is to embark on an educational sensitization aspect, because as John mentioned, if only 1/3 of the people debit card use their debit card, or in fact only about 15-16% of the people really use their bank account, I think the two aspects, and more recently we've been tackled with it, will be question of cybersecurity and privacy, to ensure that the public understands it and really warm up to it, because Caribbean people by nature tend to be very skeptical, and I think we have to overcome that, and that will lay the sort of foundation, for fintech and financial inclusion, et cetera, and this, I guess, varies. It moves away from the concept of international financial center. But Jackie, just to answer your point, one of the visions we still have, which we have ignored, and I think Mike mentioned it, if we had fintech players here using Trinidad and Tobago or Port of Spain as a base, because the amount of STEM graduates that we have a lot of bright people who are involved in technology, and it's really about bringing it together and finding some investors who are willing to sort of, bankroll it in a sense. But Peter, 100 million TT, we will give you the TTIFC bank account and you could transfer. Thank you very much.
If I may just come in for 1 second and say to Richard, he doesn't need that money because CCGI is here willing to help with that sensitization and education effort for free. Okay, so we can collaborate and partner on that, make sure we get the word out and really build that sensitization. So we can.
I agree. It can't be Zoom, it has to be out in the, what you call focus groups, and out in the community, taking the stage. Well. All right. Good stuff. Yeah, I don't want to boycott or hijack the talk.
I agree with you, Richard, a whole 100%, and I support Kamla with that sensitization program, because that's what we need. The only way we are going to get that fast adoption is if we sensitize the key stakeholders and public. So I totally agree. I'm happy to accept the 100 million as well, Peter, to support the effort. I will take it in US or pounds, either one. We do have a question in the chat. I know we're running out of time, but we do want to take as many questions. As you can see, this is one of the most topical subjects that we're dealing with. And I'm glad we kicked off with this session, Kamla. So we did well. We have a question here by Darcy. Is Darcy here? And would Darcy like to ask the question? If not, I can read it and we can. All right, so I'm not seeing Darcy. So how would you characterize the development of the financial centers in Bahamas, Barbados, Cayman Islands, and Bermuda? Mike, I feel this is your question.
I think it's a question for me, and it's a big topic actually. We can have another session on that another time. We do obviously look at financial centers across the world, and the Caribbean centers, in common with other smaller centers and indeed other island centers, have had quite mixed fortunes recently. We see ratings in the Global Financial Centers Index moving around, but on a downward trend. So in competition with other financial centers and particularly onshore centers, it's a really tough environment, I think, for the Caribbean centers, and that has been driven in part, I think, by the economics of the last 2.5 years and the pandemic, which has had a variable impact, in different parts of the world, but certainly both across Latin America and the Caribbean. People have seen the economy not being as strong as they would like, and that does have an effect on people's confidence in financial centers. So at the moment, I think you'd say that doing the things you do pretty well, but in competition with a lot of other centers who are competing for that business, and maybe not at the moment selling yourselves as hard as you would need to, marketing yourselves, and focusing on the strengths that you bring. So at the moment, a bit of a downward trend. I don't think it necessarily will continue that way, but there's some action to take in sort of selling Caribbean and financial services into the rest of the world.
Thanks very much, Mike. John, any comments before we wrap up? And before I turn it over to Kamla?
No, just some closing remarks from me. I think it was definitely a good session, and keeping in the theme, in terms of the evolving role of financial centers. I think the discourse definitely sort of shed some light on that. And even when you talk about the great transfer of wealth, right? And we heard from the first speaker, and you're looking at all these new economies, and you're looking at all these opportunities and these unicorns coming out of it, and one of the key things that I was reading in a report recently was, showing the whole positive impact that fintech basically is going to have on the whole global economy, and digital finance. They're sort of estimating by 2025 that, emerging economies, you're going to see some growth about by 3.7 trillion. And then, for example, for some of CARICOM states, low-income countries, some might actually stand to make about 10 to 12% of their GDP by the sort of embracing of the sector, So it's very, very interesting. It's very exciting time that you have one sector that is really sort of commanding the attention, and has so many opportunities, not just economic, but when you look at it, it's really it's really kind of standing alongside the traditional finance center in a sense, right? Because fintechs are meant to operate, alongside the banks, So it's really an exciting time to be in this space, and particularly IFCs who are evolving,
Correct. Thanks. Yes, thanks so very much, John. I want to turn it over to Kamla because I know she has a few words to close off the session. Mike and John, I really want to thank you, especially for this session. I thought we had an excellent session, excellent contribution from the participants. Kamla, let me turn it back over to you. Thank you very much for the opportunity.
And an excellent moderator, Amoy. You forgot to comment.
Agreed.
Thank you very much, gentlemen. Thank you. Turning it over to Kamla. Thanks very much.